Welcome to Kitco News. I'm Niels Christensen. We're here at the Silver Gold Summit in San Francisco. Joining me today is Cal Everett, President and CEO of Liberty Gold. Welcome to the show.
Thank you so much.
So I was taking a look at your stock price. Interestingly, it's actually mimicked the rally in gold. Your stock has performed in line with the rally that we've seen in gold. What are you doing right? Because you're very much against the grain when it comes to junior resource sectors. We haven't seen gold up, trading, just below 1,500. Haven't seen any movement in junior explorers, and yet you're managing to move with gold.
Well, what's happened with Liberty Gold is I think, have confirmed we've made a tier 1 size target discovery in Idaho in an oxide gold system. And the average grade for an oxide gold mine in the Great Basin, which would be Utah, Nevada, Idaho, would be around 0.4 to 0.5 grams of oxide gold. And we reinterpreted, after 2.5 years of reinterpretation of a massive historical database and 2.5 years of permitting, at the end of April, we started to drill a target under the concept that the historical operators, which is Pegasus Gold, had not drilled deep enough, and the high-grade oxide was actually just underneath of where they drilled. And our first 8 holes confirmed that, and now we're getting 20 to 100 meter thicknesses and quite commonly getting 2 to 8 times the average grade of what's being mined. And that happened just when the gold price took off. So big oxide gold intercepts, and they're all hanging together beautifully with high grades. We haven't seen those grades since the Long Canyon deposit was discovered in the early 2000s, and then subsequently was sold to Newmont for $2.3 billion. That was our predecessor company. So our scientists have found another big one.
So what's the key? How can junior explorers use your guys' example? Is it just doing the homework? Is it reevaluating their deposits? Because we always have an idea of what geology looks like, and then somebody comes along and says, no, it's completely different. It's this, and you should look there. I mean, do junior explorers need to go back to basics and really look at their deposits, do their homework?
You really have to have a good crew of geologists, because our geologists, and I'm not responsible for this discovery, I just manage the direction of the company. If the geologists need money or whatever else they need, my job is to deliver it, but actually manage the process of taking that discovery forward. And we've got 5 geologists led by Maura Smith, and Will Lepore, Pete Shabastari, April Barrios. You don't often hear names of geologists mentioned on Kitco. Those are the 4 famous people in Liberty Gold. They're responsible for this, and they're creating this value.
Do you think your company would be where, the stock price where it is, if it wasn't the discovery with the gold price? Because I'm sort of wondering, is it, do we need a discovery, a major discovery to get excitement back into junior explorers? Because it doesn't feel like the price of gold is really doing it.
Well, I've gone through several cycles as a banker, as a geologist. It usually takes a world-class discovery, on whatever somebody wants to interpret world-class to be, in North America to start a new junior cycle. So it could have been Consolidated Stikine, it could have been Diamet, it could have been Diamond Fields. All of these major discoveries are generally found in North America because that's where the risk capital is generally raised and then one thing steams onto another, and then the new exploration cycle happens. This one's a bit different because you're already at $1,500 gold.
And everything looks good at $1,500 gold.
Well, it does, but then you go look at AngloGold Ashanti's quarterly earnings a couple days ago, and their all-in sustaining costs went back up through $1,000. And they're in the monetization process of trying to sell 3 of their assets to get their all-in sustaining costs lower. And there's so many, I'm not sure what to call them, sale processes going on with multiple companies right now. That, I think, has stopped the M&A work of company to company because there's so many processes. And what's really key here, because I talk to anybody who's producing in the Great Basin because of the size and scale of the Black Pine Oxide gold discovery, they're all looking for mine life. It's mine life, mine life, mine life. Why would I want to go buy a mine with a 5-year mine life and eat the environmental cleanup costs and reclamation costs when I'm out of ore again in 5 years? Right? So they want new, and they want big, and they want to see 15 to 30 year mine lives. and they're not being found.
What are the possibilities of finding another, 30 million ounce or 10 million ounce discovery?
Well, there's a couple of them in the Great Basin. We think Black Pine has got room to go up into those numbers. And we've only drilled 30% of 1 square kilometer of a 12 square kilometer oxide system that we've now proven is not 300 feet thick, but it's 900 feet thick. It's a massive system, and we thought we'd get through the first square kilometer with 90 drill holes. We're at 90 holes now, and we haven't got 30% of it done. We're just not missing. And these are big grades. And it's really an earth-moving operation, right? So you could have 1 gram of gold that's worth $50 gold, you get 75% recovery. That's $37.50 to the bottom line. Let's say the mining, stripping, processing costs are $10. You make $27.50. Then it's a quarry. That's what oxide gold systems are. So you need 100 million tons, 500 million tons, and when you get up into the 500 million ton range, now you're looking at scale. So we think in the first square kilometer we might have room for 150 million tons, but that's 1/12 of it. And not all of it's going to carry. It never does. But it's the high grade component that we're hitting, which is the payback of your initial capital. So if you look at the footprint of the core area of Black Pine, well, that's the same size as the footprint of Twin Creeks. And that's produced 15 million ounces. You want to see another big one, it's California, it's Castle for Equinox. Those are 2 of the biggest oxide systems left in the Great Basin, because most of Nevada has been mined out for oxide. The average grade of some of the other producers, Round Mountain, I met Kinross the other day, that's 0.37, SSR is 0.37 grams, Mesquite 0.4 to 0.5, and these are mines that are coming, that's what they're mining. The cutoff grade at Marigold is 65 parts per billion. And they're making money because they're earth-moving operations. So once you understand they're just quarries and processing and a low capex to build and rapid payback of capital, that's why everybody's looking for these. But they've all been found over the last 50 odd years of mining in the Great Basin, and now this Black Pine just happened to be sitting there. And some very smart scientists pieced together 5 old holes in a 5 square kilometer and said it was one big hole.
Well, it's nice that you give them credit, though. It's nice that you
they deserve it.
Yeah, you mentioned geologists' names. I think,
Yeah, I mean, I personally get tired when a banker thumps their chest and said, I did this. Well, you didn't do anything. The scientists found it for you. They deserve all the credit.
That's perfect. Thank you very much for your comments.
You're welcome, anytime.
Thank you for watching Kitco.com. Stay tuned for more content from Silver Gold Summit.